Welcome, everyone. I'm Angelo Robles, host of the Angelo Robles podcast and the founder at Family Office Association. You all will have to pardon my voice today. It is basically shot. I've been in Art Basel, Miami for about 8 days, hosting a lot of things that were crypto related, actually, and I have no voice left. So you're not going to get the best of my sound today. Pardon me on that. We're really fortunate today to have a session that we're calling Crypto, the Hard Questions. It features Dan Moorhead and Joey Krug of Pantera Capital. Dan shall be joining us shortly. Joey's with us now. But to give you a little bit of context, Dan founded Pantera Capital in 2003, managing $1 billion in hedge fund strategies. He previously served as head of macro trading and CFO at Tiger Management with Julian Robertson. Pantera Capital is the first institutional investment firm focused exclusively on Bitcoin, other digital currencies, and companies in the blockchain tech ecosystem. Joey, in 2013, built a point of sale system enabling Bitcoin payments with sound and Bluetooth. In 2014, he left Pomona College to co-found one of the first projects on Ethereum, Algor, a decentralized prediction market platform and solution to the Oracle problem designed to allow people to speculate on anything. He joined Pantera Capital as Co-CIO to help oversee the fund's various investment activities. Joey, how are you today?
Great, thanks for having me.
Great, so we'll get started and Dan will likely join us somewhere through. The first question was probably a little more Dan-centric per what I noticed on his LinkedIn profile about a week ago, but it's pretty straightforward and I'll make a little adaptation to it because some things have changed over the last week. But I believe I read that Dan made a comment that effectively Bitcoin is on sale. And probably now, after some of the corrections of the last week, I could argue it may be 50% off its historical trend line. Will it stay on trend?
Yeah, that's a great question. I mean, I think there's two questions. One is, was Bitcoin going to stay on its historical trend line? And then two, is it going to stay kind of in the trend that it's had this bull market? And I think on the historical trend line, I think eventually that trend will at some point be broken, right? Because Bitcoin's compounded over 200% annualized since inception, and at some point it can't do that forever into the future. But I think with regards to the second question about where we're at in this cycle, I do think Bitcoin is still on trend, and I think there's quite a lot of room to go in terms of price action before we see the top of this current bull market.
I mean, I suppose a couple of things come into play. Probably most importantly, as in anything, is supply demand. You have the tech and some upgrades that we've seen to Bitcoin, nodes and mining. You have countries adopting Bitcoin. You have more institutional players. You have more leverage. You have more retail investors that might have been spooked off by the market and got out. I mean, there's lots of moving parts here. This becomes probably more and more difficult to say what has happened in the past is going to happen in the future in Bitcoin, or does it become more predictable? Judging by the last 2 weeks, probably not.
Yeah, I don't think it becomes more predictable. I agree with that. I mean, I think you'll continue to have these like weird, kind of like really rapid price action days in crypto because it's one of the freest markets in the world in the sense that, you can open up an account on an exchange almost globally and get access to very high leverage. And so, if you look over the last weekend or, a few days ago, when prices went down, 15, 20%, within the span of a day or two, the leverage in the space, the amount of money that's locked up in these futures contracts, perpetual futures, whether it's perpetual or fixed term futures, it was something north of 60 billion. And then at one point, kind of at the low, I forget what it's at today, but at the low, it was in the low 30s. So the amount of leverage in the space almost got cut by half. And so I think as long as, these markets are still very levered, we'll still see, pretty drastic price swings in short time spans, both in the up and the down direction.
Yes, that makes sense. I mean, is there a new Bitcoin super cycle like never before? Meaning we saw at certain times before the halving cycle, multiple times. What's been 3 times where Bitcoin specifically has went down 80% or more. There has been a belief, maybe hopefully optimistic by some, that, oh, that's not going to happen again. It's too big. It's more institutional now. I don't know if I quite buy into that, and I'm okay with that. I know it's still early, a very volatile asset, but to say that it can't go down a significant amount, again, I don't believe that to be true, but you know more than me. What do you think?
Yeah, it's an interesting and it's a question we think about a lot at Pantera. I think there's a couple of different universes. One is where, price action goes really crazy. And by that, I mean, you have some sort of parabolic run up over the space of, 4 to 8 weeks where the price effectively more than doubles. And I think if that happens again, we're very likely to see, some sort of market top where you could have a very severe drawdown on the other side. Maybe we don't go down, 85% like in the last cycle. Maybe it goes down 70%, but there still could be a very severe drawdown on the other side of this. The other kind of universe is like, you just don't see that parabolic run up. You see kind of, what people in the industry kind of call like the market will just melt up and it kind of goes steadily up a good amount, over a period of months. And then you look back in time and you're like, wow, the price doubled over this number of months, but it wasn't like, 6 weeks. And I think in that universe, that's what people call the quote unquote super cycle. But I don't think the super cycle means it's not going to go down. Like even if the super cycle thing is true, and even if we are in one this year, this price went down 50% this summer. And so you could have a new sort of paradigm where like this market moves so much faster than everything else. It trades 24/7. It's global. Stuff is being built in this market faster than other markets. You could totally see a universe where there's really fast kind of bullish periods followed by pretty severe, 50% drawdown style bear markets, but they're more abrupt. They're not the multi-year thing. They happen over the course of a number of months, primarily due to leverage. I think that is a possible universe. I actually tend to agree with you, though. I think the kind of old school universe of, we see a big run up and then a big drawdown later is probably what's more likely to happen. But, we still think the second universe is still a possible one.
Yeah, I mean, like after each big drawdown, the couple that I mentioned prior, the floor price gets higher all the time, and eventually it reaches a new high. It does appear to be a bit of a pattern. Many of my audience are going to be familiar with Plan B, who is coming on next week for those that are listening in live. And hey, we all, have analytics to make a prediction. November was a little complex. Maybe December is going to be as well. But looking at it from a long-term perspective, I would ask you, Joey, has your thesis in Bitcoin changed at all?
It's definitely evolved over time. Like, I think when we, first invested in Bitcoin, well, back then, really Bitcoin is all that existed. And then, you fast forward today, you have other things. I do think Bitcoin is still, kind of the market dominant leader for the digital gold market. But I think like the idea of like what's actually going to get built where and get like real world usage is all kind of happening in smart contract based chains, whether that's Ethereum or Solana or Polkadot or other things. And I think, there's one other kind of, thing that's happening in the market with Bitcoin right now, especially among the institutional audiences. And it's, you can argue whether it's overblown or just bad PR and it's not, or they don't get it or whatever. There's a lot of different, like, it's a complex issue. But I think from a PR issue, like, I'm not one of these people who actually think it's a serious issue, but like the ESG issue surrounding Bitcoin, is one where like it's taken a PR hit. And so if you see these really large institutions and you talk to them and they're thinking about deploying capital into the space, they often mention DeFi, ETH, the stuff happening in the NFT space, companies. Very rarely do we see an institution come to us and just say straight up, we want to buy a ton of Bitcoin. Versus 2 years ago, that's kind of all that the institutions were saying. I mean, you still see it some, but I think that's one dynamic in the market that has changed is due to kind of the PR issue Bitcoin has with ESG, whether it's overblown or not is a separate question, but I think it makes it a less attractive asset for a bunch of different reasons.
For sure, for sure. I mean, I look at myself as an example. We all often begin in Bitcoin. Unless we become a hardcore Bitcoin maximalist, we diversify. Usually Ethereum would be next. And really over the last year, as I've significantly diversified a lot of what I own, I still have great respect and pay homage to Bitcoin and what it created as truly its proof of work system and being decentralized. But I look at it simply from an asymmetrical trade opportunity. I don't think my upside over, especially over a 3 or 5 year window, I think I have better asymmetrical bets. That doesn't mean that I don't think Bitcoin is good, maybe very good, but I may find other asymmetrical opportunities, maybe a little bit more risk on my part, but I think the reward may be multiple. I mean, I'm assuming you would understand that, but in helping our audience, who often is not going to be a Bitcoin maximalist, understand that, I think it relates to what you said about the institutions. 2 years ago, all they knew about was Bitcoin. Now they want more asymmetrical opportunity as well.
Yeah, I totally agree with that. I think that's exactly sort of what's playing out.
I mean, I think relative to that and the current market cycle, let's see how I can phrase this a little bit. Everyone wants to be a gangsta until they need to do gangsta stuff. And now that they may need to know how to use MetaMask and how to use Uniswap and how to get earlier stage crypto and tokens, and understand that some days you may wake up and that stuff is down 30, 40%. But you look at the opportunity, because often it could be up that much as well the next day. Like, how are you seeing people that are more newer to the market? Are they having the so-called diamond hands and sticking through tough times? Or is the small retail investor getting in and getting out quick when the shit hits the fan?
I mean, I think it's both, right? Like, and then even among kind of some of the more kind of, I guess for lack of a better word, legacy, financial players coming into the space, I think you kind of have two camps, right? You have the ones that are like, we're going to buy this stuff and hold it for the next 5-10 years. And those people, for the most part, they buy it, they don't really get scared by a drawdown. Sometimes they even buy more. I think the other camp you have is people who are kind of more, I'd say like more kind of like follow the hot money ball kind of types, whether that's, an institution that's coming in and, leading a lot of really late stage, really expensive growth rounds in, equity companies in the space, or whether that's just like a retail, trader, or even professional traders. A lot of them come into the space. I remember seeing this on Twitter this weekend. People are saying like, some of my friends who are like, really good traders on Wall Street, they're kind of like scarred by the fact that the market went down, 20% in a matter of hours. And it's kind of like, welcome to crypto. I remember when I bought my first Bitcoin, it was somewhere between like $5 to $20 on Mt. Gox in the summer of 2011. And, the price collapsed like 99% because Mt. Gox got hacked the first time. And so the asset that I bought went down to like 2 cents, over a few hours. But then you see that it comes back and you kind of get this more confidence in the space versus like, in the traditional equities world, if a stock goes down 20% in an hour, it probably means something close to akin to the company's dead, or, the CEO got killed in a car accident, like something really bad happened, right? But in crypto, like nothing really particular diminished the fundamentals this weekend. It was just a random kind of idiosyncratic market sell-off.
Yeah, I mean, I would say just because the markets in crypto or even Bitcoin, a blue chip within crypto goes down 20 or 30%, I mean, you have to look, is your thesis still there? Do you still believe in it as a good asymmetrical opportunity? Just because the price went down does not mean you should be getting out. That probably is the worst time to get out. But again, we're all led by our emotions, our fears, how we feel in our stomach. Waking up in the morning, if we had 7 figures in Bitcoin and we just lost a couple of 100K overnight, that's scary to a lot of people. Even though they know better that that's the time not to get out, our emotions with many of us unfortunately get the best of us. Not me, of course not. In 2 years, do you think Ethereum, and I'm going to throw in Solana, do you think Ethereum and Solana will have a higher market cap than Bitcoin?
Yeah, it's an interesting question. I think in 2 years, probably not in 2 years, just because I think that I think we'll probably be in a bear market in 2 years. And so I think ETH might actually outperform BTC in percentage terms in this next bear market, but if it does, probably not by a lot. And then I think Solana will really underperform. So I think if you add the two up, they'll probably still be less than Bitcoin in 2 years. But I think over, a 5 to 6 year horizon, I think they'll combined be above Bitcoin.
Even Solana.
Well, no, sorry, not individually. If you just add the two of them together, their market caps will be larger than Bitcoin, I think.
And tell me I'm wrong, it's fine. When I look at Bitcoin and have, again, tremendous respect for Satoshi, the blockchain, the truly decentralized, one of the arguments has been that it has no intrinsic value. From an investing perspective, I think intrinsic value is bullshit. So I'll put that on the line. And I would say it does because it's nothing more, arguably, than a store of value. And that does have so-called intrinsic value. But on to the more negative point. It could be used as money, although arguably somewhat inefficient, but getting better, and the store of value that I mentioned. But when I look at Ethereum, Solana, many of the layer one chains, they have developers developing on it. They're doing things. They're developing protocols, DeFi, NFTs. Some are doing gaming. They just simply do more. Are they evolving more with the times? And in 10 years out, could Bitcoin be a bit left in the dust?
Yeah, I think there's a couple things there. One is on the store of value piece, the store of value functionality of Bitcoin is kind of like the base functionality, right? Like every other blockchain, from a technical standpoint, has the same features. I think the question is what do you have from a community kind of market value mindset perspective. And I think one thing that's really interesting about stuff like Ethereum is if Ethereum does get lots of traction, lots of adoption on smart contract usage, which is seeming to be the case. The amount of value locked in DeFi a few years ago was nothing, and now it's hundreds of billions of dollars. Roll the clock forward 10 years, right? And imagine you have tons of games built on Ethereum, tons of financial applications built on it. It has all this name recognition. It's sort of plausible that ETH itself becomes a store of value in that universe. It just has so much more brand recognition. Bitcoin could become gold in the sense that not that many investors own it. It is a small amount of a lot of people's portfolio, but not not a crazy amount of people own it. And there's just other stuff that's more interesting to own. I think ETH is certainly more interesting to own. The question is, can it ever actually claim store of value status from Bitcoin? And I think if you fast forward 10 years and ETH has 2 billion users, and if you phrase it that way, I think it's totally plausible that it could become a store of value.
For sure. What concerns would you have about Ethereum from the fact of wickedly high gas fees, relatively slow, and Solana has definitely kind of came out of nowhere. I can name others as well, but that's going to be the one that many are going to be most familiar with. Yes, I know they're going to change so-called to a proof of stake, and that will make it faster, more cost effective. But until I see that, I don't really know. Could I make the argument that Ethereum has some challenges longer term as well?
Yeah, it certainly faces challenges. I think a lot of the challenges that Ethereum faces are technical ones, right? And the challenges Bitcoin faces are kind of community ethos ones.
Right.
Bitcoin is kind of taking the position that the community is taking the position we don't really want to change it. We want it to be kind of constant, really digital gold. I think there is a market for that. I think the market for Ethereum and Solana, et cetera, is a lot more intellectually interesting. But I think, and then if you look at kind of problems Ethereum faces, it has the problem of scalability. It too has a community ethos to it, right? The Ethereum community ethos is be very decentralized. And the Solana ethos is make it fast and make it work, and make it as decentralized as you can, but prioritize making it fast and making it work over that piece. And I think the question for whether ETH can succeed long-term or not is can you solve those scalability challenges in a way where you're still decentralized, where the scalability is good enough that people are willing to deal with it. And so one way to break this down into something concrete is for financial use cases. If you can someday get ETH to 100,000 transactions per second, and Solana's doing 1 million, ETH is good enough. Even if you add up all the kind of world's financial use cases today, they don't use 100,000 TPS. If you look at social media, on the other hand, social media is going to need way more than either of those numbers. And so I think it kind of depends on the use case, but I think it's plausible if Ethereum solves the main scalability issues within the next 2 to 3 years, it'll retain market dominance in DeFi use cases. I think it's probably going to lose market dominance in areas outside of DeFi, which also is like fine. Like I don't think everything needs to take place on one blockchain.
For sure. And actually your definition longer term of Bitcoin, my words, technically not yours, but effectively digital gold, there's nothing wrong with that. And I think that would actually be fine. It is a hardcore decentralized, and what it does as a store of value is, I think, what makes it kind of special and unique. To think that it could do all for everything is just probably, it's unrealistic, it's unfair. Is Bitcoin stagnant from a tech and upgrades perspective? I mean, there is Lightning, which is an off-chain layer 2. There's Taproot, which is recently. So I would say they're keeping abreast, but is it ever going to get to the point where it could compete? I mean, in theory, could they do NFTs? What could be the long-term optimistic potential for Bitcoin looking 10 years out?
Yeah, I mean, I think that Bitcoin, it's not completely technically stagnant. You're right. There are some things that are happening, like Taproot is, it adds these different electronic signatures called Schnorr signatures that they allow you to do a lot of interesting things with multi-sig wallets and things like that. There's some, depending on how you look at it, loose privacy benefits to it, depending on what you're doing. And then with Lightning, you kind of get, fast micropayments on top of Bitcoin. I think a lot of that stuff is I'm trying to think how to describe this in a way that doesn't sound overly critical, because I own a good amount of Bitcoin, so it's not like I hate the asset. It's more just I think the way I describe it is it's a lot of taking gold and trying to make it better. It's you have a piece of gold and you're polishing it, so it's super super polished. Some people might just throw their gold in the vault and store it, but some other person might say, I want my gold to be as shiny as possible, and so you polish it and you put it in a fancy display box and you do all this stuff. The stuff that people are doing on top of Bitcoin, things like Taproot and kind of these slight improvements in the cryptography or slight iterations, on top of it, they add some value, but they don't fundamentally change the value proposition. It's, I guess, the way to put it. Your piece of gold, as long as it's a certain pureness of gold, if yours is a little bit shinier, it's not that big of a difference. It's probably going to go for roughly the same price at the market. And I think from a market differentiation standpoint, that's sort of what Bitcoin's doing. They're not really differentiating themselves in the market, that community, by these upgrades, versus if you look at what people are doing on top of Solana or on top of Ethereum or on top of Polkadot with Parachain stuff. They're doing very drastic, kind of radical technical changes that enable things that are very concrete to the user. It's not like your gold rock is a little bit shinier, or your transaction is slightly faster. It's if you go from ETH to using a layer 2 on ETH, you're going from 10 transactions per second to hundreds. If you use Solana, you're in the thousands range. If you use Solana, your transaction fee goes from $50 to a fraction of a penny. There's kind of all these big changes that are happening in those ecosystems. So I think it'd be unfair to say Bitcoin is technologically stagnant, but it's stagnant from the perspective of actually making changes that are going to impact users in any serious, real way.
I'll mention a couple of other layer 1s. We've already mentioned, obviously, Ethereum and Solana, and where you think they could fit in and what their niche may be. And they would be 3 of my personal favorites. So I'm dying to hear your opinion so I can learn more. One would definitely be, for me, Terra Luna.
Yeah, Terra is one of our larger positions. I think, there's a couple of things interesting about it. One is it's sort of like a fork of the Cosmos stuff. It's part of the Cosmos ecosystem. And 2, the team that's building on top of Terra, they just work really fast and they iterate really quickly, and they launch stuff that works pretty well. And they do it fast, faster than almost anyone in the space. Do Kwon and Terra, we've backed 3 of his projects, I think soon to be 4. And, of the three, they're all above 50x's, which I can't think of any other entrepreneur I've backed. And these are all like in a 2-year time window, right? Like that's insane, both in or outside of crypto. It's kind of unheard of.
How about Avalanche?
Yeah, I think what Avalanche is doing is really, really interesting. It's, honestly, it's been quite a while since I've looked into their technical architecture. But I looked into kind of all the initial like proposals and stuff they were working on fairly early on. We don't own any of it, but I think it's a very interesting project with like, I would say differentiated tech.
And how about Polkadot?
Polkadot's one of our big positions. I think Polkadot's interesting because it's very future looking. And so the pitch for Polkadot basically is, think about like an application that's going to have 10 million or 50 million or 100 million users. Today, the most successful applications in crypto, I forget what Uniswap has, but it's probably less than 1 million monthly actives, or maybe it's around there. I don't actually know. It's hard to tell because people can make multiple Ethereum wallets and stuff like that. But let's say for sake of argument, it's around 1 million, or even if I'm out of date and off by an order of magnitude, we can say it's 10 million for sake of argument. Polkadot says like, what if you have an app that has like 100 million monthly active users or 100 million daily active users? And at that point, you're going to want to have a lot of custom logic in your blockchain. Like you're not just going to want to deploy a smart contract onto someone else's chain, but you are also going to want to have like the security benefits of some shared network. There are going to be things you're going to want to interact with and get access to on other, parts of the blockchain without being kind of constrained by what ETH or what Solana or whatever gives you out of the box. And so Polkadot makes it really easy to basically launch your own chain. It's called a parachain that can interact with all the other Polkadot chains pretty seamlessly. And so I think that's an interesting pitch. And I think it's probably how the world plays out over 5 to 10 years. And so for Polkadot, it's kind of like they just need to survive long enough and kind of maintain market dominance there, such that when somebody does get, 50 million users, they kind of become the go-to place for people to build on.
I mean, not really meant to be a macro discussion. I have that coming up with Raoul Pal next week. But you look at the total market cap that came from nowhere in 2008, and right now all in about 2.5 trillion. And you look at that trend line, and that's amazing. Is it not a stretch to say in 10 years that could 50 to 100x? And that's what I mean about the asymmetrical opportunity. When you look at other asset classes, probably oil about 100 trillion, global stocks about 120 trillion, and probably bonds and real estate about 300 trillion plus, I could see this ecosystem being 50 to 100x what it is now. It's hard for an investor to ignore that.
Yeah, I mean, I think this ecosystem is definitely going to grow a lot. I think there's kind of like, there's two different like questions in terms of how big it can get. One is like, is this like, the next generation of tech? In which case it's like, globally it's maybe a $20 trillion thing. And then there's like, is this going to like eat into like the way we think about money and storing value more broadly? In which case it can be even larger. That's where you kind of get to, numbers that are, of 2.5 trillion, 50x and up kind of thing. I think my view on it is, I'm very confident that it's going to eat most of tech. And it's not just like a financial thing. It's a financial thing right now because that's what's easier to do, and the tech is inherently financial. But it's going to disrupt other areas of tech as well. I think like the next time someone does build like some new sharing economy platform that we haven't thought of yet, if Solana and ETH, existed in the state they are today, maybe add 3 years to that. So if they exist in a world where like, Solana is more decentralized and ETH hits kind of Solana style scalability numbers, and then you roll the clock back and like say that existed at the time Uber was founded, I actually think it would have been built on blockchain tech. I think it would have made the regulatory strat easier. And I think it would have just made a lot more sense in like the growth of like having some sort of token model in that with drivers and like kickstarting adoption like day one would have been really, really interesting. And probably that's how it would have been built. It's I think it's going to eat everything. And so then kind of like the tech question, I'm like almost certain of. And then like the money question, I'm just less certain of because like it's a harder problem and it's much less clear how it plays out. I think it's possible. That's kind of my view on that part of it.
Yeah, if we had more time, we could definitely do a deeper dive on some of what you said, which may also go into DAOs and how that's going to, the rise of DAOs, the impact on Silicon Valley, on the VC industry broadly, and about how, the next Google or Facebook could effectively come from a DAO, but we're probably not going to have time to do a deep dive into that. What my audience would love to hear from you, is they basically know from market cap what the top 100 cryptocurrencies and tokens are, but many of them are not yet active in MetaMask and the swap programs and the earlier stage. What would be some sub $100 million protocols that you're interested in that you could talk about?
Yeah, I mean, I think, these days, I'd say top 100. I can name some. I think, sub 100 million is harder just because I actually don't think we own anything sub 100 million valuation at this point. We do in the private markets, but those aren't, liquid. I think on the liquid side, though, some stuff that we're interested, it's kind of in the smaller caps, depending on how you define it, and depending on how you look at market cap, which is a side topic that we don't have time to get into. But I think one that's really interesting is perpetual protocol. It's like a derivatives protocol built on Ethereum. It's a competitor to DYDX. We like it. We've been backers of them for a while. It's a position we've held kind of since earlier this year, and it trades at a cheaper multiple than DYDX. It's just a much lower valuation, kind of on a relative basis. I think another one it's starting to get up there. Market cap, it's in the top 100 now, but it's like 76 or so. Arweave.
Yes,
it's a decentralized file storage play, and yeah, super interesting just because it's the one it's the one of those plays that has a good amount of traction, but it kind of trades at the lowest valuation. Let's see what else outside of those. I mean, you mentioned staking. This one may be one that people in the audience are familiar with, but they also may not. There's this thing called staked ETH, ST ETH. And so say you own an ETH position, but you don't want to lock it up in ETH 2.0 and wait maybe a year to get liquidity. You can stake it in what's called this thing called Lido. It's an app in the space, and they'll give you a derivative that basically trades, and it's very liquid. You can sell $100 million of it with 50 bits of slippage kind of range. And when ETH 2.0 launches, they'll give you your interest from the ETH that was staked. So it's a pretty cool project if you're looking to earn a yield on ETH. Outside of that, I think again, all the stuff built on top of Terra is very interesting. We own a good amount of Anchor protocol, which is their peer-to-peer lending protocol. It's kind of their equivalent of Compound or Aave, and it's I think in the 200s or so by market cap. So those are a few kind of off the top of my head.
Yeah, I mean, I'll just make a comment to some in my live audience that I'm familiar with that are relatively newer to crypto. And some of you were reluctant to initially get into Bitcoin and Ethereum. And one of the things you heard about Bitcoin was, I don't know if it's going to stand. It doesn't have any intrinsic value. And again, those are all things I think we somewhat covered within the last 30 to 40 minutes. But if you're less familiar with layer ones, Ethereum, Solana, Terra Luna, Avalanche, Polkadot, what's going on in staking and DeFi and gaming and the metaverse, there is real shit being done. This is not just quote unquote, it has no intrinsic value. Well, it does have intrinsic value. Joey, maybe to get a laugh, Shiba Inu has intrinsic value. I didn't think it would. I thought it was just a meme. And they over-delivered and under-promised, I guess. And now, they're developing all sorts of swaps and dropping NFTs and talking about gaming and their own blockchain. I mean, things are happening so quickly that the paradigm of how you invested in the past, at least in this ecosystem, is completely, your past knowledge may actually be a detriment in terms of understanding this ecosystem and moving forward. You're too young to understand that because you didn't go back to the 80s, 90s, and even early 2000s. This is how it's supposed to be, I'm assuming, to you. But you deal with a lot of older, more established investors and institutions. Is this whole ecosystem coming at them like 100 fire hoses at once?
Yeah, I mean, I don't think so. Well, I guess there's two aspects to it. There's like, is the ecosystem to them like drinking out of a fire hose? And I think the answer is yes. They're trying to wrap their heads around it and understand it. Um, and I think they're talking to a lot of people. I don't think they get like inundated though. Like you look at like the endowments you've been talking to, like I don't think they're like inundated with like funds, reaching out and pitching them, that sort of thing. I think it's more kind of, they're reaching out to people, talking to like a handful of kind of like the best firms in the space, and then trying to just like learn and then figure out, what they want to do. And whether that's like, you know, make an investment into a fund, whether that's like spend more time just thinking about it, or, decide to like co-invest in deals. I think people are just trying to wrap their heads around it. And, as the space changes very drastically every 6 months. So if you're one of those endowments and you like check out the space, get up to speed, you spend like 6 months on it, and then you come back a year later and expect it to be the same. Yeah, you're kind of going to be in for a bit of a rude awakening because the space moves so fast.
So much has evolved in gaming or GameFi. Do you think that will become an even bigger sub asset in the digital asset ecosystem?
I think so. I mean, we're seeing a lot of those deals. I think they're they're a bit hypey though right now. Like I think long term, a lot of them are interesting, fun games are going to be built with like economics kind of built in. But right now, you have a lot of people raising money in that space, and it's very very hype driven. And there's not really anything that has like, you have a handful of things, right? You have like Axie Infinity and a few others, but then most other stuff kind of has very low user numbers. But I think that changes. It'll just take time.
And similarly, in terms of what's going on in the metaverse, uh, there's different ways for people to invest. Obviously, there's Decentraland, there's Sandbox, but there's even aspects like you mentioned, Arweave could be a part of what a decentralized metaverse could look like. Do you think that also is something people could focus on for asymmetrical returns?
Yeah, I mean, I think, the standard disclaimer, like who knows where this stuff is going to go. But I think, the reason why we own Arweave in our portfolio in particular is, a couple of things. One is we think that it adds diversification, right? We own a lot of DeFi, we own a lot of layer ones. We own a good amount of like, NFT and gaming stuff over the last year. But, Web3 kind of file storage, there's not that many good investments in that space that actually have usage. And Arweave is one of them. And I think also on a relative basis, it's undervalued. You know, who knows on a macro level whether the decentralized file storage space as a whole over or undervalued, but at least within it, Arweave is cheaper than the other comps. And so like that's why we're overweight it on a relative basis.
I've been talking a lot about, I think I'm early, got hit hard in the last week or two, but what do you think about the future potential of social tokens? Although they each do something different, I could think of Rally, FWB, which is Friends with Benefits, Chills. What do you think about some of those?
Yeah, I think that sounds like interesting. I haven't like wrapped my head around like how big that market is long term. I think it may just kind of like fall in like the category of, you know, community DAOs, right? Like FWB is kind of like essentially a DAO that like throws little events like at various crypto events. Like they always have like these FWB side events, and you have to own some number of tokens. I forget the exact amount to get in. Um, it's like I don't know like how valuable that is, but I think it's like it's interesting. Um, it's interesting for the same reason that like the API Club is interesting, or like CryptoPunks, that kind of stuff. Like people are just building these communities on the internet that have some sort of like you know membership or initiation fee or asset that you have to own.
I could ask this about any crypto or token, but why don't I just do it on the classic Bitcoin? What would make you change your mind that Bitcoin and other, well, let's stick with Bitcoin, that Bitcoin remains a strong thesis and a good investment moving forward? Would it be hardcore government regulation, Satoshi appearing? I don't know. It's whatever it may mean to you.
Yeah, I mean, I think well, I don't think Satoshi appearing would do much. Well, it depends what Satoshi's position was. Like if Satoshi came out and said he was going to sell all of his coins, you know, I'd probably run to the exchanges as fast as I could to try to sell them before he did. But you know, other than that, like, no, I don't think Satoshi being public would really change my view on it. I mean, I think on the government side, yeah, I mean, obviously, like if they like outlawed it or something, but I don't think that's going to happen. I do think that, you know, one thing that would change my mind on like, is Bitcoin a good investment or not, would be.
Joey, you might have froze. If the audience could hear me, our live audience, if you could just put it in the Q&A or chat, then it may just simply be on Joey's side. There it goes. It froze a little bit, Joey. I think you're good now.
Hey, can you guys?
Yep. Oops, you might have froze again. Hello? We'll give it a couple of more seconds to see if it gets better. I have a direct Ethernet, so I don't think it's my side. Oops, we lost Joey. He might try to come back in. He's going to have a very hard stop, probably a minute or two before the top of the hour. Some of my more difficult, probably techie-oriented questions, and I had a bunch of them we didn't even get to yet. I probably would have liked to have asked 3 to 5 of about the 20 that I had. It seems like I never have the time to get to all I want to get to, which is why I like 2-hour interviews. I'm simply curious and have a lot of questions. Taking on a little bit of what Joey said, I actually think Satoshi appearing could be incredibly negative. It's probably more than one person, but let's simplify the issue. Let's assume that it is, whatever it's man or woman. He did say something interesting. If that person were to sell their gazillions of dollars in Bitcoin, and shocking how that first block hasn't been moved yet. Why would that really matter besides flooding the market and there'll be a downturn? Is that because there's a religious fever around Bitcoin, where if someone like a Satoshi were to sell, that would be a loss of faith? I find that a little concerning, actually, in some ways, but there's other concerns as well. Suppose government manipulates this person. Suppose kidnapping risk. Suppose they get crazy and go senile. And again, that causes a disturbance within the ecosystem. In some ways, it's probably better that Satoshi remain, let's go with the word, anonymous, whoever it might be. But those are certainly things, and I could mention that about any investment in crypto, that would leave a concern. The next question I would have had for Joey, assuming he doesn't come back, but hopefully he will, is in the monetary economy, money is considered a store of value, where it can be used as a means of saving and allocating capital. Why is Bitcoin a better store of value than CryptoPunk NFTs, baseball cards, Rolex watches, Solana, Ethereum, whatever? I argue that it's not. And again, I like Bitcoin. It's a holding. I think it's phenomenal in terms of what it launched and how truly hardcore to this day, after all these years, that it is decentralized. But I'm always reluctant when I hear things that are inflation hedges and hardcore stores of value. If you look at downturns in markets in the past, all of that changes over time. Gold, for one cycle, I guess, of inflation, was a quote unquote inflation hedge. It certainly really isn't that anymore. Joey, you are back. I want to make sure you can hear me.
Yep. Yeah, I can hear you.
Good. Why don't I ask you the question I was just kind of pontificating with the audience about? In a monetary economy, money is considered a store of value where it can be used as a means of saving and allocating capital. Why is Bitcoin a better store of value than an NFT like CryptoPunks, baseball cards, Rolex watches, or Solana? I'm going to argue it's not necessarily a better store of value, but I'm open to your opinion.
Yeah, I mean, I think on my view, well, I think there's a difference between like which is going to go up more and which is a better store of value, I think. And I think there's like two perspectives on this. One is like, I think those other assets are much more likely to like go up more, maybe not the baseball cards, but the, CryptoPunk as an example. But I think the thing that's interesting about Bitcoin is it's this great, Schelling point for a store of value. Like it's very fungible. It's actually one of the most, fungible assets in the world. And it has a very liquid market that trades 24/7, a very deep market. And if you look at something like a CryptoPunk, like in a bear market, like there's always a price for like Bitcoin that it will trade at. I don't know how well like the floor punk price will like hold in a bear market. Like there may be times where you want to list your punk and like someone will probably eventually buy it, but like they might not buy it that day or that week. Like it may take like 2 weeks for your order to get filled. Is that likely? I actually don't know. I haven't like thought about the probability of it, but like it's a question that pops into my mind versus like Bitcoin. I know that there's almost always going to be a price that I can sell it at if I want the liquidity instantly, which makes it like an attractive store of value for the same reason that like if I have a bar of gold, I can kind of go to almost any pawn shop in the world and they'll quote me a price for it. It may not be a price I like, but it's very liquid, which I think is why it's like an interesting store of value.
Oh, that's a good point that Joey brought up in terms of like I asked earlier, Bitcoin has went down massively multiple times in the past and has effectively bounced back bigger and better than ever. Whereas some of the things that we're talking about now, CryptoPunks being one, which is a very popular NFT, really hasn't been tested like that. Ironically, the before mentioned Shiba Inu has, although it's been a very limited window, probably about 16, 17 months now. But the one time it did take a massive hit, it did bounce back, I'll give it that. And then you look at the network effect and community and kind of figure all that out. I mean, things that you guys probably as a more institutional player are not involved in, but over the last year, probably no asset class in crypto and tokens has outperformed memes. It's amazing.
Yeah, it's wild. And yeah, I mean, like, I wish we'd put on a massive Dogecoin position, right? And like, you don't want to put too large of a one on because like, we obviously are trying to also like invest in stuff that actually like, I'd say really like moves the space forward. But from like our liquid fund perspective, yeah, I wish I put a big Doge position on. It'd be, absurd to say for some philosophical reason that you wouldn't want to put one on if you knew. And so I think it's true. Memes have performed, really, really well. It's sort of been the same thing with like in the equities world, kind of meme stock phenomenon. I think it's, people find them fun. And it's the first time I think crypto is kind of in like the meme stock stuff. It's kind of the first time people decided to like have fun in financial markets, like in a really like actually pretty funny way. Like the fact that like people will like buy GameStop just because they thought it was interesting, or like, I mean, there are huge groups of people, thousands of people who bought, GME on Reddit, not because like they thought it was going to go up, but because they were quote unquote, fighting the market makers and citadels of the world or whatever, which is like a really wild phenomenon that like, the economics classrooms that teach you about the EMH, they don't really consider that someone might buy an equity, just for the lulz kind of thing, which is what's happened over the last year.
In the final stretch of time that we have, I do have probably questions that would make the cyberpunks happy and the hardcore Bitcoin maximalists. So let's just try to maybe pound them out in lightning round. If it's something you just want to skip over, just say so and I'll move to the next. What is the inter-blockchain communication protocol and why is it important?
Yeah, so it's basically a thing that the team behind Cosmos came up with. And what it does is it enables you to basically provide a proof that like a certain piece of data, they call it a packet, but a certain piece of data was emitted by an application on one chain to another chain. And this lets you transmit basically assets and data across different blockchains in a way where it's kind of the same protocol. Computer science has a long history of people coming up with 100 different ways, to do one thing. And with Cosmos and the IBC, they're trying to come up with a standard that other blockchains can implement.
Blockchains cannot fully scale because of the time it takes to communicate the current state. The network's slow communication limits the block size and frequency, kind of preventing scalability. I don't know, but how would you solve that problem?
Well, I think in terms of speeding up communication, the fastest way to speed up communication in blockchains is to make them more centralized. which is like, okay, that doesn't sound
Yes.
great. And so, but what you can do is you can make certain components more centralized and have them fall back to a completely trustless, decentralized thing. I mean, that's the whole idea behind layer 2 is on top of Ethereum. You go to a new chain that's a little more centralized. And if that chain tries to basically do anything malicious to you, you can go back to Ethereum and get proof that it went wrong. The other technique that's really interesting for scalability, I think somebody might have mentioned it in the chat earlier, is like zero knowledge proofs. So you can basically do a bunch of computation and provide a proof to someone that the computation took place in a way that was, accurate, honest, nothing was modified maliciously, that sort of thing. And then other people can verify the proof. And when you do that, it basically like the problem with stuff like Ethereum is everyone has to run every computation. It's like if you did 2 times 2 on your calculator and every calculator in the world also did it at the same time. And like the next time you wanted to do a multiplication, it had to your calculator had to get in line behind everyone else who wanted to do one. It'd be nonsense. And so zero knowledge proofs are a really creative way to get around that issue.
Is Chainlink Verifiable Randomness Function important? If so, why?
I don't know how many people are using their Chainlink's VRF. Verifiable randomness is important in the sense that, it basically like there's certain like applications that need it. There's certain parts of like ETH 2.0 that, use sort of a source of randomness. A lot of cryptographic applications need a source of randomness. And so Chainlink's VRF is a way to get that source of randomness on chain. I don't know how many people like actually end up using that or using it, but so I don't know if it's important, but VRFs in general are a cool concept.
And Joey, so I could have a little context of time. Do you have 5 more minutes or no?
Let me see. No, because actually let me check something real quick. I probably have like 3 because I have a big LP call after this one, but I think I probably have 3 before.
Okay, maybe I'll try to buzz through 2 quick ones. Is it important to have control of a UTXO in a Bitcoin wallet?
Yeah, so, I mean, one of the things people new to the space often ask is like, what is a UTXO? And it's like, it stands for unspent transaction output. It's basically like with Bitcoin, the money you have, like you kind of have the history of each time it's been spent. And the most recent time it's been spent is the UTXO. And in your wallet, like owning Bitcoin means you just have the ability to spend a given UTXO. And so, yeah, if you don't have control over it, you literally don't have the money. So the short answer is yes, it's important.
What is the major flaw of a Bitcoin paper wallet?
Major flaw of Bitcoin paper wallets is just that like, well, it's easy to lose. Also, like, if somebody's cleaning your house and they take a photo of it, they can literally, in some cases, depending on how you constructed it, steal your money. So they're not very secure and they're easy to lose.
Okay, this last one's a bit of a bitch. How would node operators stop a reorg if Bitcoin miners went rogue? An example, and started double spending.
So if miners went rogue and started double spending, if you're a node operator, there's not a ton you can do. There's a few things though. One is that you can basically like hard fork the network. Like you can make a modified version of the node software that ignores those double spends or replays them in a certain way. There's a lot of kind of interesting things you can do. Whether the network actually is going to adopt it or not is a separate question. You might have different forks that reflect one canonical history, like where one of the spends is considered valid and one isn't. I mean, this is sort of we're kind of getting into kind of deep parts of the tech stack here, and this is sort of a hand-wavy explanation, but this is sort of similar on some level to what happened with the DAO hack in Ethereum. So DAO got hacked, and the node operators, people running nodes, the people who maintain those GitHub repos made the modification. And the next time you launched your node, it said, do you want to follow this canonical history, which is where like the hacker got the money and, can do whatever he wants. That became Ethereum Classic. Or it's like, do you want to follow this history where like, it's as if the hack never happened, and that became Ethereum. Yeah, there's an interesting comment in the chat actually on this, which is like, yes. And that's like, so the thing with the double spend is relative to like to who's being double spent against. So like if you're a merchant and you're selling like a Porsche 911 with Bitcoin, yeah, you can wait 100 confirmations and like it's not going to be double spent. You probably don't want to sell a Porsche 911, without waiting for a single confirmation. Like that transaction could be replaced with a higher fee, which doesn't send the money to you. So yeah, double spends are also like on a relative basis. One of the double spends will eventually, get reorged essentially. And so like the other answer is that like in practice, double spending is something it's relative to the merchant who's being double spent against. It's not actually a thing that the underlying blockchain really cares about. Like this actually chat comment's really interesting. Like what it means is like after a certain number of block confirmations, only one of those transactions is canonical anyways, because you can only spend a given unspent transaction output once. Which is why like in practice, the question here is very theoretical because like node operators would never really would never really like probably reorg the chain over double spends. They would just wait until it kind of happened naturally and a certain number of confirmations happen. There's not really anything you need to do in that case, in my opinion.
Yes, and for our audience, I know the last couple of questions, we got a little hardcore there, but many of you are used to the basic questions. We wanted to shake it up a little bit and get you to think a little differently. Joey's going to have to run, but before he does, Joey, tell us a little bit about how those interested in Pantera could learn more. Is there a conduit they could reach out to? Is there an email that they could reach out to you?
Yeah. So for us at Pantera, if you want to reach out to me, whether it's about anything really, a company that you're working on or no one, it's just joey@panteracapital.com. If you're interested in investing or just in materials on our funds, you can reach out to ir@panteracapital.com. There's also some information on our website.
Great, Joey. You've been kind with your time. I know you have to run. I'll do about a 2-minute close, but you could exit the Zoom and make the meeting. Have a great rest of the year. Look forward to connecting with you next year.
Thanks, you too. Take care.
Great. And everyone, I'm Angelo Robles, the host of the Angelo Robles podcast, the founder at FamilyOffice Association. Really enjoyed interviewing Joey. Yeah, it would have been great to have Dan on as well, but Joey's like the whiz kid who got into this when he was a teenager, had literally started building shit and doing amazing things at such a young age, dropped out of school and basically was aligned with Pantera. My God, I think when he was a late teenager, just a couple of years ago. It's really amazing to have him on. I know we got a little techie and hardcore there at the end, but as many of you are looking to take your knowledge from where it is now to another level, I don't just want to keep on asking the same standard questions all the time. Now, to give a little bit of context, this will be for my live audience, not as much those that see this a week late. We have a very strong end of the year, really over the next 7 to 10 days, especially in Bitcoin and crypto. We have upcoming Raul Paul of Real Vision. I think I'm going to get 2 hours with him, and we are going to go deep on the macro issues, very deep. So that's going to be a lot of fun. We have the before mentioned Plan B on, and he thought Bitcoin was going to reach a very different level than it is right now in November and December. So where did things go wrong? Or is this simply something that will cycle through and will pick back up again in his modeling moving forward? I don't know. We shall find out. And we do have the return of Bitcoin maximalist, really more of a freedom maximalist, and one of the biggest names in Bitcoin, Robert Breedlove. And I will be very prepared to ask Robert some really tough questions. So we have a lot of great guests coming on. We'll hope you have a chance to enjoy it. And again, with anything when it comes to investing, this is for education and entertainment purposes. Things change radically. A lot of it more opinion than fact. Who knows? Do your own diligence. Your time horizon, your risk tolerances are all different. When you invest, you can absolutely lose money. You might even lose all your money. You have to know those risks going in and then make your own decision in investing. And again, everyone, pardon my voice. It's been a hard week at our Basel, Miami, just crushed my voice box. It'll probably take about a week to recover, but hopefully was all good for all of you. I know we had some people that are live now that attended. We hope you enjoyed it. I already look forward to going back next year. And everyone, again, in concluding, I'm Angelo Robles of the Angelo Robles podcast. Thank you all, our live audience, those that will watch and listen. We hope you enjoyed it and look forward to many more in the future. And again, wrapping up the year real strong. Have a great day. Thank you.